Welcome to Fun with Annuities with your host, me, Stan the Annuity Man, America's annuity agent. Can annuities be fun? Can contractual guarantees be fun? Absolutely they can. Find out the brutal facts about annuities with no sales pitches or high-pressure nonsense. Just the brutal and factual annuity truth, which is all you need to hear. Let's have some fun with annuities, and let's have that fun start right now. Welcome to Fun with Annuities, the number one annuity podcast on the planet. I'm your host, Stan the Annuity Man, America's annuity agent, licensed in all 50 states, coming to you from the Will Do, Not Might Do studios and shooting this on the Annuity Fun Cam. For all of you listening on the podcast platforms, we do film this on the Fun with Annuities YouTube channel. So if you want to check that out and check my face and check out my hand gestures as I'm yelling at the camera, that is cool as well. As you know, the Fun with Annuities motto is living the reality, not the dream, and we're talking about contractual realities. And I do encourage you to go to my site, theannuityman.com, for everything, books, schedule call, the whole thing. But let's jump into the topic, which is a big one today, and it falls under the you own an annuity for what it will do, not what it might do, the contractual guarantees. So today's topic is the MYGA secrets that you need to know. So let's start off by explaining what a MYGA is. Multi-year guarantee annuity is what MYGA stands for. MYGAs are the annuity industry's version of a CD. It's not any more complicated than that. You know, I get a call from Chester today. Chester's the mythical prospect with his wife, Martha, that calls me every day and asks the questions, but I get these questions all the time. It's like, hey, Stan, it's MYGA. I want to buy one of them MYGAs, but I'm a CD buyer. Well, what's the catch? It can't be that simple. Yes, it can, Chester. It can be that simple. Multi-year guarantee annuities are simple. For all of the people out there who go, I hate all annuities. Stan the Annuity Man, I hate them all. Really? Do you hate CDs? Do you hate principal protection? Do you hate guaranteed interest rates? Do you hate products with no fees? Do you hate simplicity? Of course you do not. Multi-year guarantee annuities are kind of the unknown gem of the annuity industry. Why is it unknown? Is because agents don't get paid a lot. Remember, commissions with annuities are built in and hidden from the client. And the more complex and longer term the product, the higher the commission. The more simple the product and the shorter term the product, the lower the commission, even though it's built in. That's the reason that in the annuity world, if you have a sprained ankle, a sore throat, or you have COVID, someone's going to try to sell you an indexed annuity because they think that's the solution. It's not a one-size-fits-all solution. Multi-year guarantee annuities have been around for hundreds of years. I mean, just like a CD, you get a guaranteed interest rate for a specific period of time that you choose. And the durations can be as short, at the time of this taping, 2 years in length. You can buy a 2-year multi-year guarantee annuity. And you can buy a 3-year, 4-year, 5-year, 6-year, 7-year, 8-year, whatever, 10-year. But right now, the sweet spot's around 5 years and in. And I will allow my clients to look at the 7-year rate if it's a part of an overall like MYGA ladder, multi-year guarantee annuity ladder. So that's a multi-year guarantee annuity. The biggest difference between a MYGA and a CD is in a non-IRA, non-qualified account. So like your checking type account. A CD gets that annual interest, and you have to pay taxes on an annual in a non-IRA, non-qualified account. With a MYGA, in the same type of account, the interest grows tax deferred. So you don't pay taxes until you pull the money out if you do that. That doesn't make it better than CDs, but it is different than a CD from that standpoint. Now, if you're using IRA money, CDs and multi-year guarantee annuities inside of an IRA, so you're already getting tax deferral. There's no double tax deferral, so you're already getting one tax deferral. So, you know, if you're a CD buyer, then you're a MYGA buyer, and you just don't even know it, okay? And you should be looking at it because CD rates right now at the time of this taping stink to holy heck, and you know that. Nod your head. MYGA rates are pretty competitive because annuities are issued by life insurance companies, and life insurance companies have multiple products. They sell life insurance, they sell lifetime income products, and then they sell these multi-year guarantee fixed rate type products. So they have a lot going on, and they know when we're going to die, which is the reason they have the big buildings, the reason they have the logos on the planes. It's the reason that they're now sponsoring sports stadiums, right? So, the positive of a MYGA are what I just told you: tax-deferred growth. You can use it in any type of account: IRA, non-IRA, Roth IRA. It doesn't matter. Those are the positives. The positive also, there's no annual fees. There's no hidden costs. There's no gotcha costs. There's no, people always ask all the time, so what are the fees? There are no annual fees. Don't feel sorry for the annuity company. They're making money. And yes, the agent that sells you gets a paltry low commission, but that's okay because it's not about us, it's about you. And that's hidden from you. So if you put $100,000 in a MYGA, you're going to see $100,000 on your statement and going to work for you. Now, the negative, I guess, and every product has negatives, right? Nod your head. The negative is that a MYGA is not as safe as a CD, in my opinion. That's my opinion. CDs have FDIC insurance. F stands for federal. F stands for we're going to get the frickin' money somehow, right? That's the best coverage on the planet. Whereas multi-year guarantee annuities, you should always buy the multi-year guarantee annuity rate based on the claims paying ability of the carrier. Yes, there's a state guarantee fund that each state has that backs policies up to a certain amount, but it's illegal to use that in the sales process. And we're not doing that because if you're working with me, which you should, and I hope you do because I'm licensed in all 50 states, I'm Stan the Annuity Man. I said that quick. Stan the Annuity Man, America's annuity agent. I mean, I hope you do. I mean, we sell more MYGAs than anybody on the planet. But if you're working with us, we're going to look at the claims paying ability of that carrier. Now, if you want to go to the site and look at what your state guarantee fund is, go to NOLHGA, N as in Nancy, O, L as in Larry, H as in Harry, G as in Gary, A as in Apple, NOLHGA.com, and you can find out what your state guarantee fund is. With that being said, buy the claims paying ability. Now my background with Morgan Stanley and UBS and all those little highfalutin firms, Dean Woodard, Payne Weber, I can look at a bond portfolio and a solvency ratio. I can look at all that. I always tell people, I can look at the bond portfolio and tell when the son-in-law is buying the bonds. Okay, we all know that. So the daughter of the CEO, marries Skipper, the frat boy, and Skipper the frat boy doesn't know bond from schmond, and all of a sudden he's buying bonds for the annuity company. No, I can spot that. So, if I'm going to recommend the carrier to you, then I've looked at them, and I've got my rear end on the line because I'm going to say, hey, I think that this company can back up the claims. So let's get to the secrets and a lot of the typical questions that are asked to me just pretty much every day. So one of them is, how far out should you lock in a MYGA? That really comes down to what your goals are for the asset. But currently at the time of this taping, I'm telling my clients, really look at 5 years and in. If you look at just basic yield curve analysis and really what that means in English and just hanging out on the corner explaining it, is where is the sweet spot for the yield? Where are they offering me the most yield, me as the consumer, for the shortest duration, and that's 5 years. Because if you go to theannuityman.com, and we have a live feed of the best MYGA rates on the planet. We have more carriers than anyone, period, and it's updated live. If you go there and you look at it, you're going to see that the carriers really don't reward you for going farther out than, say, 5. 7 gets you maybe a couple more, not 100, but like 20 basis points more. So, I tell people 5 years and in, at the time of this taping, the shortest duration is 2 years. Back in the day when interest rates were a little bit higher, there were 1 year MYGAs. And I guess we'll go back there if interest rates ever go up, if Jimmy Carter will stop building houses and start, pushing interest rates again, right? People always say, well, I'm waiting for, rates to move up. And I'm like, Jimmy Carter is building houses in Georgia, I hope. I hope he's still alive. He's like 92, swinging the hammer, right? But we're not. I'm looking at you, and you're listening to me as you're driving down the road and podcast, or on the treadmill, hopefully. We're probably not going to see those rates again. And people say, well, rates have got to go up. I mean, for the last 5 years, people have said the following to me. Well, Stan the Annuity Man, America's annuity agent, licensed in all 50 states. Not many people say all of that, but some do. Well, rates have to go up, right? No, they don't. Japan, anyone? People are spoiled here. They don't have to go up. They can go down. In fact, there's a good argument for them to go to zero. I hope I'm wrong about that, but there's a good argument. Why is there a good argument, Stan the Annuity Man? Very good question, podcast listener and viewer. The reason is when you're printing all this money as a country and giving it all away just to make everybody feel better and get through it, right? And I know people are having hard times, but man, we're printing money ridiculously. When you do that, you're going to have to pay interest on the money that you're printing. So in my opinion, there's no incentive to raise interest rates if you're the government that's printing money. Give you an analogy. Would you, this is a question to you, podcast listener and viewer, would you raise your mortgage payments just for the heck of it? Would you do that? I mean, would you raise the interest rate on the mortgage payment? No, you would not. It's the same thing that's looking the government in the face as they print, send, print, send. So we could rates go to zero? Absolutely. I hope they don't. But could they? Yes. Japan went negative, for goodness sake. Some of the European countries went negative on interest rates. So don't be cavalier and uninformed and uneducated and just randomly say, well, rates have to go up. That falls under the category of, I hate all annuities. Really? I mean, it's not informed. It's like saying, I hate all restaurants. Rates have to go up. They don't have to go up. Do we want them to go up? Yes. For the podcast listeners, I've got my hands together. I'm praying, yes, we want them to go up. Please. Please go up. We want them to go up, but they might not. So how far out? 5 years. That's the answer to that. And really, one of the positives about MYGA is kind of going back to the original first segment of the podcast. The positives of a MYGA, you can ladder maturities, meaning that, let's just say, for instance, you say, Chester calls out, well, I got $300,000 to put in MYGAs. What would you do, Stan the Annuity Man? What I would do is I say, okay, let's buy a 2-year, a 3-year, and a 5-year. Just an example of a ladder, and you put $100,000 in each maturity, and as they mature, then you can just roll it into another multi-year guarantee annuity. By the way, you can keep pushing that tax puck down the ice, hockey analogy for all my hockey people out there. You can just keep rolling the MYGA. In an IRA non-qualified account, it's called a 1035 exchange. 1035 refers to the IRS code that addresses annuity to annuity transfer, which is a non-taxable event. If you're really bored, go read it. But the point is, if you get to the end of your surrender term, end of the time frame of the MYGA, the anniversary date, let's just say about a 5-year MYGA, and at the end of those 5 years, you can then transfer it to another MYGA and keep pushing the tax puck down the ice. Now, eventually, when you pull the taxes out, it's last in, first out, gains first, tax ordinary income levels. But a lot of people just want principal protection, and they want a guaranteed interest rate, and they just want to, not take the interest, even though you can with MYGAs. A lot of them allow you to take interest out, but they just want to keep rolling it and rolling it and rolling it. Side note, another positive, just hit me. Bing, like lightning bolt, annuity lightning bolt, ping. In some states, like Florida, Texas, I believe Nevada, annuities are creditor and lawsuit protected in the law. In the law. I mean, if you have an annuity, you've owned it for a couple of years, and someone randomly runs into your car and they try to sue you for it, you literally can flip them the bird when it comes to the annuity. They cannot get to it by law, which is a good thing. So that's just an added benefit. Another question that comes in, and one of the secrets to this is how short-term, and I think I just covered that. 2 years is the shortest duration at this point, and there's really only one carrier that's offering it. The 3-year piece of paper, the 3-year guarantee, has a lot of carriers that are offering good rates, and obviously killing CD rates right now. Again, not better than CDs, but if you're looking for yield, if you're looking to squeeze oil out of the brick, as they say in the South, then the 3 year is pretty good. It's not a long duration, and at the end of the term, you can get your money back if you want it, or you can roll it, whatever you want to do. Surrender charges on these type of MYGAs are high, and they're predatory. Let's not mince words. Let's get down to business here, okay? Let's take a 5-year MYGA, for example. Typically, the surrender charges are going to be like 9% the first year, 8% the second year, 7% the third year, 6% the fourth year, and 5%. It just goes down as the duration lessens. That's pretty high. That doesn't mean that it's bad. I mean, they're locking in the rates. They don't want you to pivot and go buy a boat. Obviously, they got to lock in the rate somehow, and that's kind of keeps you from doing that. But a lot of these MYGAs allow you to peel off the interest penalty free, or take out, say, 5 or 10% annually penalty free if you need liquidity. So if you're working with me, Stan the Annuity Man, America's Annuity Agent, licensed in all 50 states, and you say, hey, I kind of need some liquidity, there's a possibility we need to get to a little bit of the money, then we will find a multi-year guarantee annuity that has that provision to either take out interest or take out a percentage annually. And if you go to my site at theannuityman.com, there's a lot on the front page that says see live rates. Click the button, it'll pop it up, and then you just put in your state and the duration. In that grid, on the grid, we make it very easy to see, which products allow you to take interest out, which products allow you to take money out on an annual basis. And not all the time, but a lot of the time, the companies that don't allow that type of liquidity have the highest guarantee. Duh, makes sense. But if you need that type of liquidity or the possibility of liquidity, then we have to build that in. We have to choose a carrier that provides that. Now, the best site, obviously my site, theannuityman.com. And there's no pop-ups and flashes and wanting you to sign up and all this junk. Obviously we want you as a client, but the way that I had my staff, team, consultants, and everybody build the site was kind of like a media site a little bit. There's videos and there's podcasts and there are replays and there's articles. I'm a serial writer. That doesn't mean I'm writing about cereal, okay? This is about cornflakes. No, it's not that. I'm writing. I've written over 400 articles. I've written 7 books, etc. But you get a lot of information. But also with the MYGA feed, you don't have to sign up to get it. You can just go in there and look at your own leisure 24/7, 365. That's the way I want it. When I go into a site and I want to look at something and get some information, I don't want pop-ups and people trying to bug me to sign up for a newsletter or something. If I want to sign up, I'll sign up. And I'm assuming that's who you are as well. And by the way, if you haven't caught this by now, I'm a straight shooter. I am not going to mince words. And if you work with me, and I hope you do, give me a shot at it, okay? All 50 states. I'm going to tell you the truth. As my grandfather said, in Stanley, North Carolina, out in the barn, to Stan the Annuity Man, when I wasn't Stan the Annuity, I was just Stan. He said, Stan, if you tell the truth, you don't have to remember anything. Think about that. If you tell the truth, you don't have to remember anything. That doesn't mean I'm better than everyone. That doesn't mean I'm smarter than everyone. I will tell you I outwork everyone. But I will tell you this. If you don't need an annuity, I'll tell you. I was on the phone, before I tape this, I'm taping this right now at night because that's when things slow down for me at Stan the Annuity Man. And one of my last calls, we went through the whole process. And at the end, I said, you know what? If I'm you, I don't buy an annuity right now. I wait. Because his situation was different. It wasn't involving a MYGA, but I'm just going to tell you, I encourage you to try to interact with me. Schedule a call at theannuityman.com because I'm going to shoot it straight. So let's get back to the MYGAs. A couple of questions. A lot of people, can you take money out? And we talked about taking out interest. And they want to say, can I take out the interest? I don't want to test the principal, but can I take out the interest? The answer is yes. Now, when you take that interest out and you put it in your bank account, then that interest is taxed at ordinary income levels. Last in, first out, gains first. But you can, with a lot of these MYGAs, just peel off the interest. So let's give an example. Let's just say there's a multi-year guarantee annuity out there at the time of this taping. Let's just say it's at 3%. I'm hoping that someone watches this 5 years from now and goes, 3%, man, that's horrifically low. I hope that's the case. But anyway, as an example, you put $100,000 in and you can peel off the 3% every year, so $3,000 a year. So for 5 years, that's $15,000. And at the end of the 5-year term, you've peeled off the $15,000 in interest, and you still have your $100,000 intact. Hello, no annual fees, no hidden fees, no nothing, blah, 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 and you control the asset. People are always worried about that, but we can do that, and we can set it up where it's hitting your bank account. You know, when you go through the application process with theannuityman.com, I have the best team on the planet. Just tell us exactly what you want to happen. We'll make sure it does, and we'll take care of all the paperwork from start to finish, soup to nuts. You won't get in the weeds or in the mud. Period. I mean, it's that simple. Another question I get a lot, and it's one of the kind of the secrets and little things. People say, well, do MYGAs have an upfront bonus? Well, first of all, if someone's asking me about an upfront bonus, they've probably been to a bad chicken dinner seminar. They probably heard the too good to be true sales pitch of an indexed annuity. Indexed annuities are CD products. Multi-year guarantee annuities are CD products, period. Difference between the two, multi-year guarantee annuity has a contractually guaranteed annual interest rate. Indexed annuities protect the principal. That's the only contractual guarantee. There's all kinds of hypothetical, theoretical, projected, hopeful unicorns chasing the butterfly returns that agents always talk about with the index options. But at the end of the day, it's a fixed annuity. It's not a security. Indexed annuities aren't a bad thing. We use them for delivery systems for income, very efficient delivery system for an income rider guarantee. But if you just want a guaranteed interest rate, you go with the short-term multi-year guarantee annuity. Not all the time, not some of the time, all of the time, period. Do not get fancy. Do not try to be master of the universe. Do not believe the hype. And here's getting back to the upfront bonus, I digressed a little bit. Upfront bonuses are attached typically to index annuities. So if you sign, let's say, for instance, if you bought this index annuity, they give you a 10% upfront bonus for signing. Stop for a second. Stop. Okay, before you go, hey, that sounds pretty good, Stan. Why don't we do that? That's free money. It's not free money. There's not some philanthropist that wakes up in the morning at an annuity company and goes, you know what? I think I'm going to give money away today. No, they don't do that, okay? The bonus is part of the overall contractual guarantee. It's a non-event. For me, I call it candy for the stupid. If you're dumb enough to buy an annuity for the upfront bonus, you're the rube at the table in Las Vegas. You're the sucker. You're that person. Don't be that person. If it sounds too good to be true, it is every single time. Multi-year guarantee annuities, 99.9% of the time, do not offer an upfront bonus. And let's just say that 0.1 did. Who cares? It's all about the yield to surrender. It's all about the guaranteed yield. So upfront bonuses, I wish would be done away with the annuity industry because it attracts people that trust too much, okay? And people that think it's too good to be true. It's just that simple. Finally, one of the last questions I get all the time with multi-year guarantee annuities, and we're talking about the secrets, the hidden secrets of multi-year guarantee annuities. I think I've covered a bunch of it, most of it. But what a lot of people say, what's the catch? Stan the Annuity Man, America's annuity agent, licensed in all 50 states. What's the catch? It does sound too good to be true. It's too simple. There's no moving parts. There's no annual fees. There's no market attachments. I can buy a short-term 2-year. What's the catch? Why haven't I heard about this before, Stan the Annuity Man? Why are you the only Pied Piper? Why are you screaming into the hurricane? Florida analogy. It's not too good to be true. It's a contract, just like a CD is a contract with you and the bank, or if you bought one from a brokerage firm, you and the brokerage firm, to pay a specific annual interest rate for a specific period of time that you choose, with no market attachments, no moving parts, no hidden fees, period. And the commissions are built in and hidden from the client, but they're really, really small. They're minuscule. And when compared to like the commissions to indexed annuities, they're not even on the radar, okay? So I'm not saying that's bad with indexed annuities, but the reason that when you go to the financial advisor or the agent of the bank and you tell them, I sprained my ankle and I don't feel good and I wrecked the car, what do you think I should do? And they go, you know what? I think you should get an indexed annuity. What? It's not a one-size-fits-all. It's not square peg in a round hole. But multi-year guarantee annuities, if you are a bunt single person, baseball analogy, if you like simplicity, if you like short-term, if you like understanding what you own, this is your product because you can explain it to a 9-year-old, no offense to 9-year-olds. I always kid that, you should never buy it, anything, unless you fully understand it. That's an old Warren Buffett rule. Warren Buffett's like, someone asked him one time, why don't you buy derivatives? He goes, I don't understand them. He's the richest guy in the world, right? Or one of them. And he's like, I don't understand it. I understand Coke and I understand candy. I understand, well, that's what he buys. Same thing. Multi-year guarantee annuities, you can explain to your spouse or partner. You can explain to the beneficiaries. You can explain to your children. You can explain it, period. And that is a good thing. I guess in closing with multi-year guarantee annuities, the secret is that they have been a secret. The secret is that you need to know about them. The secret is you need to include them right alongside either your muni buys, your treasury buys, money market CDs, fixed rate annuities, multi-year guarantee annuities. And the other little hidden secret is that multi-year guarantee annuities and fixed index annuities are both CD products. They both were designed to create CD returns. The difference is multi-year guarantee annuity returns annually are contractually guaranteed. Also remember this, annuities are contracts. That's a fantastic thing. If you like a multi-year guarantee annuity, you go to my site at theannuityman.com and see one, and you say, you know what? I want to dig further. Stan the Annuity Man. Send me a specimen policy. I'll send you a specimen policy. I'll send you the exact policy that you would get, the verbiage, so you can read it from front to cover. There's never an urgency to own an annuity of any type. Hello. The urgency is to understand it, period. And at The Annuity Man, we allow you to make your decision on your terms and on your time frame. And even if that decision is no, that's okay. We want to educate you. So I encourage you to go to my site, get the book, sign up for the books. I've written 6 owner's manuals on all types, including the multi-year guarantee annuity. I'd love to ship it to you for free under no obligation. I promise you, no one's going to show up at your doorstep or call you randomly. Period. The only way to talk to me is to schedule a call or call the 800 number and I'll pick up the phone. No one's going to randomly call you and say, hey, no, we don't do that. We're going to put you on a update list and a newsletter list, etc. So go to theannuityman.com. Use the MYGA live feed. We have calculators there as well. You can schedule a call with me. And it's really an informational site. I think you'll really like it. But I'm glad you joined us. This is Fun with Annuities with America's annuity agent, Stan the Annuity Man, the top podcast in the country for annuities. Why? Because we have fun with annuities. Why? Because we're living the reality, not the dream. I'll see you next week. Thanks for listening to Fun with Annuities. Please hit the subscribe button and make sure to go to my site at theannuityman.com, where you can run your own SPIA, DIA, and QLAC quotes and see a live feed of the best MYGA fixed rates in the country, and even get indexed and income rider quotes as well. You can also sign up for my 6 annuity owner's manual books, and I'll ship them for free and under no obligation. I also encourage you to schedule a one-on-one call with me, Stan the Annuity Man, so we can have a full discussion of your specific situation. It will be the best brutally factual and truthful advice you will ever get, and that's one guarantee you should definitely take advantage of. So join me next time for the #1 annuity podcast on the planet, Fun with Annuities.